Stock dilution can be compared to a double-edged sword. The concept can negatively impact the value of the shares you own. Again, the strategy, if well implemented, would have a positive impact on the business venture. This presentation will explore the general overview of NIO's recent stock dilution. Welcome to my channel. Time to subscribe. Dilution is a management strategy employed to recalibrate a company fundamentals vis-a-vis financial position, and again to reposition the company as a strong competitor. And this is achieved when a company increases its stock or issues new stocks, if you like, which in effect decrease the existing shareholders' ownership percentage of that company. And again, stock dilution can also happen if and when stockholders, like company employees or holders of optionable security, exercise their options. However, for the purpose of this presentation, let us stick with the first definition. And for the purpose of clarity, stock split is not the same as dilution. Stock split enhances the stock liquidity and make the shares more affordable for new investors. Stock split don't result into dilution because the strategy is designed to create and supply new additional shares, particularly to existing shareholders, in proportion to what they already owned. And to know more about the concept of stock split, check my video titled Apple Stock Split at the end of this video. And unlike the stock split, stock dilution also reduces the stock EPS, which is calculated by net income divided by the float, which oftentimes decrease the stock prices. In the recent ongoing development, NIO intend to raise say 1.722 billion by issuing an additional 75 million shares. According to the latest report, Shanghai Chinese EV NIO announced on August 27, 2020, the outset of the offering of 75 million American Depository, the ADX, each representing one Class A ordinary shares of the company. What does it mean? I mean, what is the impact of this action concerning existing new stockholders? Well, I will make it simple by breaking it down further. If the management decided to take their company public through what is known as the initial public offering, an IPO, they sanction the numbers of shares that will be offered. This number of outstanding stock is often regarded as, quote, the float. However, if and when the company issues additional stock, it will now be called secondary offering, meaning they have officially diluted their stock. In effect, the shareholders who bought the IPO and subsequent buyers now have a small ownership stake in the company. And again, while it primarily affects the company ownership, dilution, as mentioned earlier, also reduces earnings per share, which often depresses the stock price. Let me use simple analogy, maths, if you like to explain better. Suppose a company called SoftTalk has issued 100 shares to 50 individuals, shareholders. Each shareholder owns 2% of the company. Thereafter, if the company has a secondary offering and issues 100 new shares to 50 more shareholders, then each shareholder will now own 1%. And the smaller ownership percentage also reduces each investor voting power. And again, if and when a company issues more shares, The laid down principle is that it has to be implemented and executed at a lower price than the current market price of the stock, which inevitably reduces the value of your stock. Okay, let's say as at today, NIO stock is worth $20 per share, and now with NIO selling more shares for say $15 or $17, it will lower the market price of your position. So, what is the reason for a company decision to initiate a stock dilution policy? And why did NIO decide to initiate and implement this policy? In addition to the reason mentioned earlier, a company will initiate a stock dilution strategy to enhance its financial position if and when a company needs additional capital to execute a bigger project to remain competitive within the dynamic market condition. So in the case of NIO, the need to raise capital is very key to the survival of the company because according to a recent report, quote, the company cash balance is not adequate to provide the required working capital and liquidity for the continuous operation in the next 12 months, end quote. So you will agree with me that it is the right time for NIO to introduce stock dilution. More so, as the share price is at all-time high. And again, NIO is a growth company, a new startup with a lot of potential that requires a lot of cash injection for stability and growth. Is stock dilution a clever strategy to boost a company's financial position to remain competitive? Yes, if well executed, and no, if it is mismanaged. Well, in the case of Tesla, it's a good example. Tesla has really, over the years, managed and delivered the concept of dilution into a positive mode, and Tesla shareholders are now benefiting from this strategy. In my opinion, NIO could and would most likely take a cue from Tesla performance and make the best use of this stock dilution strategy, given NIO management past record. NIO intends to invest the cash injection from the stock dilution. Quote, NIO plans to use the net proceeds from the ADS offering mainly to fund its cash investment in NIO China, as well as other working capital needs. The company expects NIO China to use the cash investment for research and development of products, services, and technology, development of our manufacturing facilities, and roll out our supply chain operation and development of our sales and services network and general business support purposes, end quote. Again, in my opinion, NIO management can't mess around. Why? Because the EV auto industry is very competitive. There is a great competition in China and abroad. For instance, the US market, and do not forget the German dynamic auto industry, the likes of BMW, Mercedes, and Volkswagen, etc. So, NIO primary objective is to use the proceeds generated for more research and development to remain competitive. Is NIO a buy despite the stock dilution? For me, it is a yes. I will buy the dip and add more shares. However, this is me talking from a long-term investor's perspective. Please do your research. Okay, here comes the best part. Subscribe, like, and comment below. Remember, the goal is to generate wealth, build companies, and create jobs. Bye now. See you soon.